In the last class, I started with the question number 2. I am proceeding the question number 2 here. The question number 1 has no adjustments except only closing stock, but in this question number 2, we have almost 8 adjustments direct and the 2 adjustments are in hidden nature. So I am going to discuss all the adjustments in this lecture. Right. Now, um, see in question number 2, these are the adjustments to be passed while preparing the final accounts trading and P&L account. Before I prepare the trading and P&L account, usually when it comes for final accounts preparations, most of the time, the students will learn the format. In the case of outstanding expenses, that expenses should be addable with the concerned expenses and post that in the liability side of the balance sheet, right? That's how we usually mug up the format. But beyond that, we still have the formats, journal entry, similar to the way how we could have passed the journal entry in the case of normal transaction. The same way we have the journal entries for each and everything. Remember, the adjustment entries are nothing but before the preparation of the trial balance, some of the adjustment might have been missed or came to our knowledge only after the preparation of the final accounts, means trial balance. As we came to know these things because of its own nature or some other carelessness, we could have missed these transactions to be posted as a journal entry and recorded in the ledger. Anyhow, before the preparation of final accounts, we have to give the due importance for recording all these things systematically as per the normal W system. So my intention in this class is to make you understand the passing the journal entry for those items, those transactions or those adjustment items. This will be unique nature. These things are in unique nature. So as it is being the unique nature, we will call that as an adjustment entry. Usually we don't pass that before the preparation of the trial balance itself, right? We usually pass the journal entry only after the preparation of the trial balance. In this lecture, I am going to pass the journal entries one by one, right? Now, closing stock. The journal entry for passing the closing stock. There are two methods of passing the closing stock, journal entry for the closing stock. But the first usual entry is, usually the opening stock will be transferable to the debit side of the trading account and closing stock is transferable to the credit side of the trading account. That's one usual way. I'm going to do that the usual one. The other way I will discuss that later in detail, not now. Is it okay? See, with this small briefing, I'm going to proceed this illustration. And in the case of closing stock, the journal entry will be closing stock. The journal entry will be, okay. The journal entry will be, this is going to be credited in the trading account. So the journal entry will be stock in trade account debit or simply closing debit to trading account. In this class, my intention is to make you understand the passing of the journal entry rather than mugging up that as a format, right? So the closing stock value being 3,000 rupees. 3,000 rupees. Is it clear? Then next entry, outstanding selling expenses. What happens? What's the journal entry for payment of selling expenses? Usually the payment for selling expenses is selling expenses account debit to bank or cash. As we don't pay, this is outstanding. The entry will be selling expenses account debit to outstanding selling expenses. The outstanding selling expenses is a representative personal accounts. I discussed that in detail in the previous class. So I'm just passing the journal entry here. So second journal entry is outstanding selling expenses. For that selling expenses account debit, selling expenses account debit, and 2. If we could have paid, then it is to bank or cash, but as still it's being pending, and I'm going to consider the party's name here. The party's name here is outstanding selling expenses. It represents, this outstanding selling expenses represents the person to whom we are supposed to pay the selling expenses. Okay, That's why the outstanding selling expenses is a representative personal accounts. Already I told you, whenever we have some prefix and suffix with the nominal account, that particular account will become a representative personal account. Personal account in general, specifically it will be named as a representative personal account. So outstanding selling expenses is going to be credited. Now the value being 200 rupees. Then now the value being 200 rupees. Is it okay? Then next. Third one, advanced administration expenses being 400. If we could have paid advance, we have to subtract because it's not real expenses. To the extent of administration expenses you paid for enjoyment or using, those extent in the current year will be considered as expenses. Rest will not be expenses, will go to the asset side. So for that expenses means advanced admin expenses, the journal entry will be okay, admin expenses. Usually if you are making the payment for admin expenses, the entry is admin expenses to bank. If you have not paid, then admin expenses to outstanding. If you could have paid in advance, this will be just reverse of that, like so. Advance admin expenses is also a representative personal account, and it represents the party to support us or service without getting the money, because we have paid the money in advance. As we have paid the money in advance, it's his commitment. If somebody is liable to us, then it will be an asset for us. So as per this understanding, admin expenses is means admin, though admin expenses are expenses, but advance is a representative personal account. Here the other party is liable. So other party is liable means it's an asset for us. Asset should always be debit balance. So advance admin expenses are admin expenses paid in advance. In the both the way you can write advance admin expenses account debit to admin expenses I'm pausing the adjustment entries here, the value being 400 rupees, the value being 400 rupees. Is it clear? And entry fourth entry, commission receivable is nothing but outstanding the amount recoverable. So outstanding commission receivable, outstanding commission receivable. Okay, simply outstanding commission income. Is it okay? So if we receive the commission, the entry will be bank to commission, but still to be receivable. Then we have not received the money, but party's name should be noted here. It represents that you have to recover money from them. So commission receivable account debit or outstanding commission or accrued commission. Now, any way you can name it. Here I'm going to use commission receivable account debit. Okay, or simply commission accrued commission debit to commission. Usually we'll get lots of confusion whether it's an expenses or income. In this case, receivable being income only, so I'll put the value in the brackets, commission in income, commission income, right? So the value here being 100. I just post here being 100. And fifth transaction is rent received in advance. So rent received in advance is nothing but income received in advance. If you are receiving the income in advance, you are supposed to owe for them. So you are supposed to give the possession of the property without collecting the money. So you are collected in advance. So if you are supposed to pay something to somebody else, then it's a liability for you. So liability should always be credit item. Here rent. Okay. So if you are receiving rent, bank account debit, rent received in advance. If you are receiving the entry, then entry will be bank to rent. But in this illustration, we have received in advance, right? So then that rent should be reversed, right? So advance rent income or rent received in advance. Okay, so in this case the entry will be, as you have received, you are liable, right? So that rent income is usually credited, but it is not as such now enjoyable. So that rent account should be now debited. Rent income account should be debited to the party Okay, rent received in advance or advance rent income. Advance rent income account. Okay, this is representative personal account. This is representative personal account. So the value being 200. The value being 200 rupees. Is it clear? Usually outstanding advance we usually won't pass the journal entry. We pass the journal entry only on account closure. So that's why without passing the journal entry for these transactions we might have prepared the trial balance after posting in ledger, and later only on closure of the accounts to determine the profit and loss from the business as well as the assets and liabilities of the business. We came to know that these items supposed to be incorporated before finalizing the real statement or real profit. That's why we are going to do this separately after the preparation of the trial balance. I'm now proceeding that. So as such now I have passed the 5 journal entries here. Now sixth one, provide interest on drawings. See what happens, no, owner could have drawn the money and he is supposed to pay interest on drawings to the company. If the company pays him interest on capital, and vice versa case, if owner draws the money and he is supposed to pay to the company, then interest compensation, that's called interest on drawings. Usually we are not aware about that, whether he has paid or firm has paid him any interest on capital. So interest on capital will be payable. So owner and the business. Okay, owner has to pay him interest on drawings, and business has to pay him interest on capital. So both will be there. Usually we are not aware about that. On closure of the books of accounts only we came to know that this should be adjustable. This should be adjustable. Is it clear? Now I'm going to adjust this one here. I'm going to adjust this one. Interest on drawings. Come on, tell me what is the entry for interest on drawings. So interest on drawings is income for the business. Income for the business. Clear? Now the journal entry will be, come on, you can post the journal entry. I think so you don't have any confusion up to the 5. Now I'm proceeding with the 6th one. I'm proceeding with the 6th one. 6th one is all about interest on drawings. Interest on drawings. As this is given in adjustment, we assume that the interest on drawings is still outstanding. Still outstanding. So this is the income for the company, so it should be credited. And in normally, if the money is received, the entry is bank account debit to interest on drawings. Of course, we don't usually receive the money from owner. It may be now kept in his own name, means outstanding, like outstanding interest on drawing. Outstanding interest on drawings means the interest on drawings is a nominal account. As we have the prefix for the interest on drawings, automatically it becomes representative personal account. Then outstanding interest on drawing represents whom? Owner. Owner is normally named as capital. Is it clear? So you can now change this as capital to interest on drawing. I hope so you could now understand how to pass the journal entry and how do we arrive the journal entry for interest on drawings here. So the party has to pay money to the business, or party is liable, or business is owning the money recoverable from owner. Owner is separate from the business as per the entity concept. So you should not have any confusion here. Owner is separate from the business. As per that concept, owner has to pay. Otherwise, the company is owning the amount recoverable from him. So the party's name is debtor. The owner is the debtor. Like that's how the entry comes here. Capital account to interest on drawings. I'm going to pass that entry here. Okay, let's see here. So I'll just cancel and write fresh. Okay, 1 second. Now the entry will be capital account debit, because owner is liable. Capital account debit. The owner's name is capital account to interest on drawing. Clear. Now the value for this is 5%. Interest will be provided at the rate of 5% on drawing. Drawing is being 1000 rupees. 1000 rupees. For that you have to calculate 5%. Now listen. When it comes for the interest on capital, no problem, you can directly calculate at that rate given for the capital balance available. When it comes for the interest on drawings, usually you have to multiply with the half, because capital, without capital the business could not be started. Okay, the business could not be started. But when it comes for the drawings, the amount could have been drawn by the owner now and then whenever he is in need. So you probably will assume that the drawing takes place only mid of the year, not in the year beginning or year end. Otherwise, he could have drawn the required fund for his own personal purpose throughout the year from the beginning to the last. So if he could have drawn the money in the beginning itself, he has to pay full interest, full year's interest. If he could have drawn the last month, probably March end, of course he is not liable to pay any interest. But what can we do? We can take the average of these two. So the average of these two could be taken. So rather than taking the opening value plus closing value by 2, simply we can assume only half of the value will be considered for the interest on drawings. This is always understood. This is always understood. Is it clear? Whenever it comes for the interest on drawings, without representing at what date he could have drawn, always remember that interest on drawings will be calculated only for the half of the year. Is it clear? With this assumption, the answer will be 25. 25. Now I will proceed further. Okay, I will proceed further. Then provide interest on capital the same way. Now it comes with an interest on capital. So interest on capital is in expenses for the business, so that should be debited. Okay, interest on capital. Interest on capital. Okay, so interest on capital is debited. If we could have paid, the entry will be interest on capital to bank. If we don't pay, then it becomes outstanding interest on capital. Any of the outstanding interest on capital is a representative personal account. That too, it represents the owner. Commonly, we call the owner's amount in the name of capital. So we can name this as capital account. Is it clear? Now, how much is that? 6% will be the interest on capital. Here the capital being 6,000. So for that 6,000 rupees, you have to calculate the rate of 6%. Of course, you no need to apply the half concept here, because without the capital, the business could not be started. Okay, could not be started. Okay, is it audible? No problem. So I'm seeing the network issue from your side. No issues. You can listen my lecture. Okay. And 6,000, for that 6% will be 360. 360 will be the interest on capital. We got it now. Clear? 7th one is also over. Now I'm moving to the 8th one. So the 8th transaction, depreciation. Depreciate fixed assets at the rate of 5%. Come on, pass a journal entry for this. 5% on fixed assets. The fixed assets being 4,000 rupees. 4,000 rupees. For that 4,000 rupees, you have to provide the depreciation at the rate of 5%. Okay, for the depreciation. So depreciation is also an expenses, non-cash expenses. The expenses could be of cash expenses and non-cash expenses. Whenever you call the expenses being cash expenses, for the expenses you might have paid that money. Non-cash expenses, being the expenses could be debited in the P&L account. Of course, there will not be any cash outflow. As there will not be any cash outflow, what happens? Maybe it may be a reason of decrease in assets or increase in liabilities. Neither of these two may happen. So when it comes to the depreciation, of course, it's an expenses, but it involves no cash outflow, but it decreases the value of the assets. As you have given me the answers proper, like the depreciation to assets, absolutely correct. I will go with that. So depreciation account debit to asset. Your answer is correct. Good. So depreciation account debit to assets account. To assets account. Okay. The value being 5%. The value of the assets is 4,000 rupees, and for the 4,000 rupees, 5% will be calculated into 5%. Right. So the value being 200 rupees. I think so. You'll now understand all these concepts without any hiccup. Without any hiccup. Right. Now the sum is not over with this. The sum still has some more adjustments to be carried over. Those adjustments are named as hidden adjustments. Usually will not be expressly stated anywhere in the adjustments, but you can easily guess that by referring the trial balance. whenever in the trial balance having any assets and liabilities, probably loans and investment, with the rate of interest, here. Clear? This is the minute point you need to note here. Clear? Isn't 10% loan and 12% investment? Come on. 10% loan means you have borrowed 4,000 rupees loan on 1/1/2015. We are closing the accounts on 31/3/2015. 31/3/2015. Is it okay? Clear? So from this date to this date, how many months are there? 3 months is there. So this loan will be uh, means attracting 3 months interest as such according year end, right? Let me write here. Let me go here. So one more block. Okay. See, 10% loan, 10% loan, 10% loan borrowed on 1/1/2015. 1/1/2015. We are preparing the accounts from 1/4/14 to 31st March 15. This is the accounting year for which we are going to prepare the accounts. And the loan is borrowed on this date. From the date to this date, the interest could have accrued. So the loan being 4,000 and it attracts 10% interest. Always this should be done. And from this date to this date, how many months we have? 1st January 2015 to 31st March 2015. How many months we have? So we have 3 months. Yes or no? Come on, answer me. We have 3 months. Otherwise, it has 3 months interest component in it. Come on, tell me. Yes, this will be 100 rupees. So interest on loan, as we have borrowed, very good. As we have borrowed loan on 1/1/15 for the year end, we need to pay 100 rupees interest. Verify in the debit side whether you have paid interest on loan to that extent or not. Whether is it available here. Of course, purchases, carriage, and debit side we have purchases, because for the loan the interest payment is an expenses should be debited. In the debit side we have purchases, carriage inward, administration expenses, selling expenses, fixed assets, 12% investment, debtors, cash, opening balance, and drawings. Of course, we don't have any interest payment. It means this interest is outstanding. Is it clear? This is how you have to find out whether the interest is paid or not. As it is outstanding, not given in the adjustments, you can find out easily as a hidden adjustment. This way it is called as hidden adjustment. So I'm going to solve this now. Hidden adjustment. Hide and seek, like hidden adjustment. So outstanding interest on loan is expenses. If you have paid, the entry will be interest on loan to bank. As it's not paid, the entry will be interest on loan account debit to outstanding interest on loan. That's all. This is normal, similar to the outstanding expenses. This entry will be passed, but that will not be properly or explicitly available in the adjustments. It's now your duty to locate and treat as per the outstanding expenses. Here, interest on loan, the entry will be interest on loan. This is the 9th one. We don't have an adjustment here. Interest on loan account debit. Interest on loan account debit to outstanding interest on loan. Outstanding interest on loan. Okay. Okay. The in outstanding interest on loan, the value being 100. Similarly, we have to verify whether is there any investment and on that any interest is received or not. As we are preparing the accounts for which date? This is for 1/1/14. The asset, that investment is made on 1/1/14, and we are preparing the accounts from 1st April 2014 to 31st March 2015. Okay. For this, though the investment is for almost 15 months, anyhow we are preparing only for the 12 months. We have to demarcate and find out that the interest only for the 12 months period for which we are accounting. So we are accounting only for the 12 months. Anyhow, the investment is made before this year. So what happens to this periods are, This period interest could be the income of the previous year. We are going to consider only the income of the current period. It starts from 1st April. As the investment is made beforehand, before this year, in this year we have the investment throughout the period. As we hold the investment throughout the period, this will be eligible for getting the interest for the throughout the period. The interest will be 2000 into the rate of interest is usually that investment and loan will have the prefix percentage. That prefix percent is the rate applicable, rate of interest applicable for that concerned investment and loan. You should not get any confusions or any doubt on that. Whenever any assets, investments or loan, it will have the prefix. It will have prefix. That prefix is the rate of interest here. So this one will be eligible for 12% interest. So if I calculate 12% on this, the value will be 240. Verify, see, so what happens, this one, sir, as I already told you, this will be these 3 months interest will be for the year 2013 and 14. We don't prepare that one now, so we are going to prepare the accounts only on 1st April 2014 to 31st March. For this 1 year only you have to calculate. So as per this 1 year, we are supposed to receive interest on investment of rupees 240. Come on, verify whether this investment interest and investment available in the credit side or not. So in the credit side, because as investment we are getting the benefits, the benefits is an income will be available only in the credit side. On verification the credit side, we came to know we have sales, capital and loan, creditors, commission received, rent is okay. We have interest on investment. Though interest on investment is 100, as per our calculation it comes around 240. What does it mean? Yeah, so the interest on investment in the credit side is 100, though it may be 100. As per our calculation, it comes around rupees 240. It means 140 rupees is still outstanding. Is it clear? 140 is still outstanding. As this 140 is still outstanding, what can we do? Similar to the uh, outstanding income, we have to pass the entry here. So the entry will be here. If you are receiving the interest, the income, the journal entry is bank to income. Here we have not received, so this is outstanding interest on investment. Outstanding interest on investment account debit to interest on investment. To interest on investment. Okay, the value being 140. The difference will be taken. Is it clear? I hope so. You could now understand all this part. Do you have any doubts up to now? So come on, finish off copying all these things. I'll just keep this entire page open for your copying purpose for some time. I request you to take your time and finish off copying all these 10 adjustments. Out of the 10 adjustments, 2 are hidden. I think so you're able to see the full screen. Yes or no? Come on, finish off copying this. I will keep the page open for some time. Make it faster. Once copied, message me so that I will proceed with the further thing. Listen. This is the most important point. After passing the adjustment entry, we can directly prepare the final accounts. Usually we'll do the preparation of final accounts from the adjustments by doing addition and deletion and transferring to the either asset side and liabilities directly without passing the adjustment entries. But for the better understanding, you need to have the process what happens while preparing the final accounts from the trial balance where we have some adjustments. Here we have some adjustments, and for all these adjustments I have passed the journal entries. After passing the journal entries, what impact will have in the trial balance, which is going to be discussed here. You just see this difference so that you will understand the final accounts much better way when it comes for the advanced study in financial accounts, right? So let me explain here. Now, now, okay, one second, I'll just adjust this page. Okay, I don't see the adjustment anymore. Adjustments not required at all because all these adjustments are passed as a journal entry. As I have passed the journal entry, this journal entry will go to the trial balance. This journal entry will go to the trial balance. See here. Now, I'll keep this one pending. The closing stock pending. Rest of the things are going to be adjusted. Outstanding selling expenses. Outstanding selling expenses. Selling expenses is in debit side. Already we have selling expenses in debit side. As it is also debit, this is also debit. You have to add 200 rupees with the selling expenses. That's all. Clear? Okay, if there is concern account, you can directly go and adjust that concern account. If the existing balance is also debit, the new balance as per the new adjusted journal entry being the debit, you can sum it up. Or one is debit, the another one is credit, means you have to subtract it. By that way, we can do all these things adjusted in the balance sheet except closing stock. Now, I have given here outstanding selling expenses, right? This outstanding selling expense, we don't have such account anywhere. As we don't have such account, we have to open a new account here for outstanding selling expenses. As it is being in the credit side, I post that value in the credit side. Okay, outstanding selling expenses. Okay, the value being 200 rupees. 200 rupees. Is it okay? This is also posted. Similarly, I'm going to record all the adjustment entries in the trial balance itself. How these adjustment entry will have the impact in the trial balance if the trial balance is prepared after the preparation of the adjustment. So that's how I'm going to work out here. Then admin expenses in the credit side. So admin expenses already available in the debit side, but here it's in credit side. It means you have to subtract 400 rupees. You have to subtract 400 rupees with the 1000. And advanced admin expenses in the debit side is a new one. We don't have that one, so I'm going to post that in the debit side. Advanced admin expenses. I don't have the sufficient space in the debit side. I'll write it down here, right? So advanced admin expenses. Advanced admin expenses is the debit item. Okay, value being 400 rupees. New item comes in the debit side. And the next one is outstanding commission income. Outstanding commission, for that commission accrued and commission income. Commission accrued is a new account. We don't have that account, and that balance is in the debit side. I'm going to write that in the debit side. Commission accrued or accrued commission. Accrued commission. The value being 100. I just posted. And commission income. Commission income. Already we have commission received. So this is in the credit side. This is also in credit side. So I have to add this one. So the 100 rupees will be addable with that 500 rupees. Is it clear? And then advance rent income, where rent is in debit side. Here rent income is in the credit side, but here is debit side. What you have to do? One is existing balance in rent is credit, and the rent as per this adjustment entry number 5 is in the debit side. Both are debit means addable, and both are credit means addable. One is debit, the another account I'm going to incorporate is the other account. One is debit means, another one is credit means. You have to subtract. Here rent received is in the credit side and rent income here is in the debit side. So that 200 should be subtracted. Minus 200. Minus 200. Subtracted. Similarly, advanced rent. Such a account is not already existing. So I'm going to write here advanced rent. Advanced rent or rent received in advance. Advanced rent received. Value rupees 200. So I have incorporated all these items here. Is it okay? These are credit, these are debit, these are debit. Now, I will be moving on to the next 5 items. Around we have 10 items, 5 adjustments over, another 5. Capital account debit side. So the capital, what we have 6,000 rupees here, credit balance, but here we have debit means you have to subtract, so minus 25. And interest on drawings, a new account. We don't have that interest on drawings already. So I'm going to write that in the credit side as interest on drawings. Interest on drawings. Okay. Clear? I hope so you could now understand. It's nothing but preparing the concern ledger like. Preparing concern ledger like, and we are making the adjustments now and then. And then next one is interest on capital. When it comes for the interest on capital in the debit side. Interest on capital in the debit side. Is it okay? We don't have interest on capital already in the debit side, so I'm going to post that value in the debit side of the trial balance. Okay, interest on capital. So the interest on capital being 360, and then the capital also being credited with the 360, but already we have credit balance in the capital account. So credit, again credit means addable, so I'm adding this. Is it clear? And depreciation is a new account, comes in the debit side. We don't have that one already, so I'm going to consider the depreciation to be debited in the trial balance. Adjusted trial balance means trial balance. The another one is it is going to be credited in the asset account, so asset account should be subtracted. So minus 200, this should be subtracted. Is it clear? So the final two more journal entries we have: hidden adjustment, interest on loan, interest on loan. So interest on loan, we don't have the interest on loan debit side, so a new account comes here, interest on loan. Interest on loan. Is it clear? So the interest on loan being 100, clear. And outstanding interest on loan, a new account comes in the credit side. So we don't have the outstanding interest on loan already in the credit side. I'm going to post that in the credit side of the trial balance. Outstanding interest on loan. The value here being 100. The value here being 100. And then the 10th adjustment. 10th adjustment. Outstanding interest on investment in the debit side. We don't have that outstanding interest on investment debit already. So I'm going to post that as outstanding interest on investment. Value being 140. And credit side we have interest on investment, debits, credit side 140. So interest on investment already we have 100 rupees. Already have 100, again 140 comes, so you have to add 140 with this. After posting all these adjustments, if you total it up with the credit side and debit side, it will be the new balances in the trial balance, new balance. Okay. So how admin expenses originally 1,400 is subtracted, the revised admin expenses is 600, selling expenses originally 1,000 and revised 200 rupees is added, so revised selling expenses being 1,200. And fixed assets originally 4,000, where 200 is subtracted, so the revised fixed asset is 3,800. And then in this side, capital originally 6,000, with that 360 is added and 1 minus 25. 25 should be subtracted. By doing all this adjustment, come on, get me the value. 360, 6,335 is the new balance in the capital account. And commission, you have to add these two, so it is now 600. And rent receipt you have to subtract, so 400 minus 200, now revised rent is only 200. Interest on investment 140 plus 100, 240. We have done all the posting, right? Before I go for closing this, as already told you, this particular closing stock entry could be of the other way. I'm going to post the other way here. How do I pass the journal entry for the closing stock the other way? Let's see here. This is the most sophisticated method of presenting the stock adjustments here. I'm going to work out that. Okay, listen carefully. For the stock, the adjustment for the stock. Okay, for the stock. The other way, note it down. For the adjustment of stock, closing stock. Usually, closing stock is what we do. What we do here. Stock in trade, to trading account, but I don't do that. So, stock in trade account. Stock in trade account debit. Stock in trade account debit to purchases. This is going to be adjusted in the purchases. This is going to be adjusted in the purchases. The closing stock value being 3,000 rupees. Is it clear? And when it comes for the opening stock, you have to simultaneously do for opening stock also. That opening stock will be addable with the purchases. Opening stock will be addable with the purchases. So purchases account debit to opening stock. For that, the value is opening stock value being 1,000 rupees. So I'm going to post this. This is the proper system of passing the journal entry for the opening stock and closing stock. In this class, I have given this one also. I am going to incorporate in the trial balance. Then how the trial balance will appear. Let's see here. Let's see here. Now, as per the revised one, the purchases already we have 5,000 rupees in the debit side. Because of the closing stock, this 3,000 will be subtracted from the 5,000 rupees. So minus 3,000, minus 3,000. And here, because of the opening stock, the purchase is going to be addable. So add 1,000 rupees. So by doing these two adjustments with the purchases, 3,000 negative, 1,000 addition and 5,000 addition. The net purchases being 3,000. Always remember, in professional exams, they will clearly distinguish the purchases from the adjusted purchases. When it comes to the adjusted purchase, this is called a nominal account. Means the items sold, purchase items sold will be called as purchases here, adjusted purchases. This is nominal account. The direct purchases usually considered as real account, because we are not pretty sure whether the purchases is going to be extinguished. The purchased item could be extinguished or over by this year itself. Some of the purchased item could be available in the next year, which is nothing but closing stock. To the extent of purchases available for the next year is real account and asset. To the extent of purchases is now sold off is not an asset and nominal account. That's a predominant confusions we most probably will have. To clarify the confusions, I have given here clearly the purchases is going to be adjusted with respect to the stocks. By doing the adjustments regarding the opening stock and closing stock, we will find out how much of the purchased items sold in the current year. Otherwise, cost of raw materials sold. This cost of raw materials sold is technically named as adjusted purchases at the professional level. Always remember that adjusted purchases is always nominal account. When it comes to the grand purchases, means all the purchases inclusive of the stocks unsold, probably saleable the next year, will be the real account. Is it okay? Now, I have adjusted the purchases this way. Now here is closing stock. Automatically closing stock is in the debit side, will come in the debit side. So already we have the debit items here. So I'm going to post that stock in trade. Stock in trade. The stock in trade, whenever the stock in trade comes in the adjustment, it means trial balance, it represents only the closing stock. Is it okay? And then opening stock 1,000 rupees. Already we have opening stock in the debit side. Now I'm going to subtract the 1,000 rupees, because here it's see opening stock in the debit side. Because of passing this journal entry, opening stock is going to be credited. It means you are going to subtract 1,000 rupees. So minus 1,000 with that. So because of passing this journal entry, the opening stock will disappear from the trial balance, and instead of that, closing stock will come in the debit side of the trial balance. So when you are passing the proper journal entry for the opening stock and closing stock, then opening stock will disappear from the trial balance and the closing stock will appear in the trial balance. If the closing stock appears in the trial balance, that balance will directly go to the balance sheet only. We don't have this to be. I think so. Now you'll be able to understand the passing of journal entry for opening stock and closing stock put together. I hope you might have copied this. Listen, after so much of adjustments, we get the adjusted trial balance this way. The adjusted trial balance is shown here. You can copy it later. Okay, see here. Once again, I will show you. Wait. Wait. Yeah. So this is the adjusted trial balance. Adjusted trial balance here, I mean, I have passed the journal entry for all the omitted items or the transactions required to be adjusted. I have posted that, right? Clear? Now, after passing this journal entry, we have this one. Come on, tell me one by one. One by one. Come on, make it faster. What sort of account is this? Purchases. Come on, tell me. What sort of account this one? Real account or personal account or nominal account? Come on, make it faster. Make it faster. Nominal account. We don't have confusion here. Can I say this purchases being nominal or real? Can it be nominal or real? Come on. Can I say this could be either nominal or real? It is not real at all. This will be always nominal. This will be always nominal because it's an adjusted purchases. How to adjust? How to adjust? Just now I explained the adjustments for the opening journal entry, opening stock and closing stock. After the adjustments of opening stock and closing stocks with the purchases, the ultimate purchases balance is always nominal account. This purchases will go to the nominal account of final accounts. So while preparing the final accounts, nominal account. The final accounts of the nominal account is nothing but trading and P&L account. It will go to the trading account. And carriage inward, nominal account. Admin expenses, nominal account. Selling expenses, nominal account. Fixed assets, real account. 12% investment, we can call that as a real account. Debtors, personal account. Cash, real account. Closing stock, what account is this? It's clear, it is always real account. As said, when it is an opening stock, hereafter the opening stock will not exist, so that will be a nominal account. Here the closing stock is always a real account. Drawings is personal account. Advanced administration expenses. Come on, tell me. Advance. Text me AAE hyphen what short of account. AAE means advanced administration expenses. Don't. Okay, very good. So you have given me the answer properly. You don't type there is simply real account, personal account, nominal account. You have to tell me whether AAE is an advanced means real account or nominal account or personal account. This is personal account. What sort of personal account? What share of personal account? Representative personal account. Very good. And commission receivable. Receivable still outstanding. Representative personal account. Interest on loan. Nominal account. Outstanding interest on investment. Personal account. Interest on capital. Nominal account. Depreciation. Nominal account. So we got it. And in the credit side, sales is nominal account. Capital personal account. Loan personal account. Creditors personal account. Commission income nominal account. Rent income nominal account. Interest on investment nominal account. Outstanding representative personal account and representative personal account. Okay, and rent received in advance also representative personal account. Outstanding interest on loan representative personal account. Interest on drawings also uh, nominal account, right? Remember, all the nominal account will go to the trading and P&L account. All the nominal account will go to the trading and P&L account. Wait, I will now write it down, all these things. I'm going to pass the journal entry here. Once again. Now, I'm going to pass a transfer entry. Okay. Transfer entry. Transfer entry is nothing but the balances of one account will be transferred to the another account. So, while preparing the final accounts, we have trading and P&L account and balance sheet. Come on, tell me, among the three, what are the items are account? Out of the three, what are the items are account? Trading is an account, profit and loss an account, and balance sheet is not an account. So purchases an account. If the purchases is transferable to either trading account or P&L account, you are pretty sure that it should be transferable to the trading account. So anything transferable to the either trading account and P&L account will have the journal entry. But while recording balance sheet is only a sheet contains the assets and liabilities, it's not an account. So while writing down the items in the asset side and liability side of the balance sheet requires no transfer entry. So the transfer entry will be required only for the items transferable to trading and P&L account, or the items usually in general one account to another account. If you are transferring, you need to pass the transfer entry. While passing the transfer entry, whatever the account balance may be, probably if it is debit balance, can be transferable to the other account, means the debit should be cancelled. The debit can be cancelled means that particular account should be credited, and then the account where it is going to be transferable will be debited. That's the logic here. Now you understand that the purchases is trading account, carriage in is a trading account, and sales is trading account. Only these three are the trading account items. So all other nominal account will go to the P&L account. So all the nominal accounts are going to be classifiable as related to the trading account and related to the P&L account. Related to the trading account, related to the P&L account. Trading account related item will go to the trading account, and P&L account related nominal account will go to the P&L account. So with that logic, now let me start with the first one. This one, sales, transfer entry, transfer entry. Okay. Sales is the credit balance. To cancel it, it should be debited. So salary account debit, and of course it will be transferable to the credit side of the trading account to trading account. Is it okay? Trading account, the value being 7,000. Okay, then here we have two items in the debit side. So for that, the journal entry will be the debit items are cancelled by crediting, and where it goes, that account will be debited here. So here these two are transferable to the debit side of the trading account. So trading account debit to purchases, 3,000, to carriage in 1,000, the total value being 4,000 rupees. And rest of the nominal accounts will be usually transferable to the P&L account. So here what are the nominal accounts we have? Rent income, commission income, interest on investment, and interest on drawings. Okay, commission income, rent income, and then interest on investment and interest on drawings. These are the nominal account. So so these credit items can be cancelled by debiting it. So commission account debit, in bracket I will put I representing commission income, not expenses, because commission we may either have income or expenses. Okay. Okay, so I'll just stand corrected here. Thank you, Adi. I'll stand corrected here. Sales. Okay, thank you. Clear? Okay, thank you. And commission income debit, and then rent income debit, interest on investment debit, and one more item, interest on drawings debit, the value being 600, 200, 240 and 25, and collectively it will be transferable to the credit side of the P&L account. Come on, get me the value. 800,065, I think so, 1,065, am I right? And in the credit side we have so many other items. I'm going to post those things now. In the credit side, right? So what are the items we have? Admin expenses. Debit item can be cancelled by crediting it and debiting the P&L account. So I'm going to debit the P&L account. Profit and loss account debit. 2. What are the debit items are there? Nominal debit, other than the item transferred to the trading account. We have first one being admin expenses. Admin expenses being 600, and then next will be selling expenses. Selling expenses, the value being 1,200. The next will be here interest on loan 100 rupees. To interest on loan 100 rupees. Then what more we have? Yeah, we have interest on capital and depreciation. So to interest on capital, value being 360. Apart from that, we have depreciation. I don't have the proper space. I will write very small. Depreciation 200. Come on, sum that all. Make it faster. What's the total? 2,460. Is it correct? 600 plus 1,200 plus 100 plus 360 plus 200. Okay. Yeah, 2,460. Thank you. 2,460. 2,460. I have just posted. Now remember, we have posted all these values. Means we have passed the transfer entry. After passing the transfer entry, I am going to prepare the concern ledger account, and the real account and personal account available, the adjusted trial balance will go to the balance sheet, assets at liability side. We'll deal it later. First, we'll finish off transferring this to the concerned trading and P&L account here. Right. Let's see here. I'm pretty slow in order to make you understand all the concepts better. Okay, listen carefully all these concepts in detail. Okay. Now, okay. So I'm going to prepare the trading and P&L account here. Okay, wait. So trading and P&L account. First part is trading account, and second part is P&L account, but collectively we name this as trading and P&L account here. Sales. I'm going to prepare post the items in the trading account. In trading account, buy sales. Buy sales. 7,000 rupees. And here two purchases. This is adjusted purchases. 3,000. And carriage in. Opposite to that, we have two accounts, so we have to post these two. And then here in P&L account, by commission, value being 600, and rent, the value being 200. Interest on investment, value being 240, and interest on drawings, the value being 25. Apart from that, here we have P&L account. In that we have two admin expenses, value being 600. Selling expenses, value being 1,200. And interest on loan, value being 100. And interest on capital, value being 360. And depreciation, value being 200. Yes. First, the trading account part is closed. The balance what you get in trading account is named as gross profit or gross loss. Predominantly, we have the gross profit only. I will write the value as gross profit here. Is it okay? So I'll write here. Okay. Come on. What is the gross profit here? Make it faster. Yeah, very good. 7,000 rupees. 7,000 rupees. So GP is 3,000 rupees. I am transferring the GP here. So by GP, 3,000 rupees. By tallying the P&L account, you will be getting net profit. Come on, get me the net profit here. Make it faster. What is the net profit here? You sum the credit side total first. 3,000 plus 600 plus 200 plus 240 plus 25. The value being 4,065. 4,065. From that, I am going to subtract the debit side total 2,460. The value being 1,605. 1,605. Is it clear? Now, this 1,605 will be transferable to capital account. For that, the entry will be net profit account debit or profit and loss account debit. 1,605 to capital account. So one more account, one more journal entry. This is also a transfer entry. 1,605. Otherwise, profit and loss account debit. Profit and loss account debit to capital account. Is it clear? So this will be addable with the capital account. Finally, I am going to prepare the balance sheet. Let's see here. I am going to finish off in a matter of another 5 minutes. Listen carefully. Okay, I have explained all these things in so detail and step by step. I am not skipping even any steps in between. Okay, listen carefully. Now, balance sheet, balance sheet, balance sheet. I need nothing anymore. I need nothing anymore. Only this 1605 is going to be addable with the capital. Okay, listen. Okay, only this adjustment entry is going to be incorporated. I'll keep all the pages available for your further reference. No need to worry. Okay. Now that 1605 is the credit side of the capital will be addable with the capital, right? Now all the personal account and real account will go to the balance sheet. In balance sheet, the left hand side is called liability side, liabilities, and right hand side is the asset side. So I have just posted here liabilities and asset. Now these debit items, the real account and the personal account will be transferable to the asset side. What are they? Purchases recorded, carriage inward recorded, admin expenses recorded, selling expenses recorded, fixed assets supposed to be recorded. So I will write the fixed assets. Fixed assets, the value being 3,800. 3,800. And 12% investment. 12% investment to be recorded here. 12% investment. The value being 2,000 rupees. And then debtors 2,000 rupees. Debtors 2,000 rupees. Clear? Usually we will have the real and personal account only. Nominal account could have been already finished transferring to the trading and P&L account, then balance is transferred. So here debtors account being 2,000 rupees. And then we have cash account. Cash account is also real account. I will post that value in the asset side. Value being 1,000. And then closing stock. Otherwise, stock appears in the trial balance, represents only the closing stock. When the closing stock comes in the trial balance, it means stock adjustments is already over. The closing stock will go to the balance sheet only. So here, we don't usually name this as a closing stock in balance sheet. This is nothing but simply stock or stock in trade. Oh, you don't say this as a closing stock, right? So 3,000 rupees. Then next one will be drawings. Drawings will be adjustable from the owner's fund. Owner's fund is named as capital. From the capital, I am going to subtract the drawing. Subtract the drawing here. The drawing value being 1,000 rupees. Don't put the value in the asset side, right? This is subtracting value. And advanced administration expenses. Advanced admin expenses being 400. And then commission receivable, income outstanding, commission receivable, the value being 100, the value being 100. And then interest on loan was already posted, so we have only outstanding interest on investment, outstanding interest on investment, the value being 140. And interest on capital depreciation. Always remember, when the depreciation comes in the trial balance, not required to again deduct from the asset. When the depreciation comes in the trial balance, it is already adjusted by passing the adjustment entry. That's how you can adjust it. You can consider. See, most of the students, even at the professional level, at the final level also, will raise the same question. If the depreciation comes in the trial balance, what can I do, sir? Depreciation comes in the trial balance means the adjustment with respect to the depreciation was already carried over. Hereafter, whenever any nominal account appears in the adjusted trial balance, that will go to the trading and P&L account only. You don't do the double adjustment, right? That's a predominant case you have to keep in your mind. Now, capital. In the credit side, whatever the items is there will come in the liability side. So here, capital being 6,335. With that, we have to add the 1,605 because of the one more transfer entry from the balance available in the P&L account named as net profit. So add net profit. Add net profit. I can show this way rather than adding and showing that in the balance sheet. 1,605 over. Then 10% loan is there. 10% loan is there. The 10% loan value being 4,000. And we have creditors here. Come on, get me the creditors value, which is 1000, I think so. And then commission income recorded. Then here the unticked item, outstanding selling expenses. Outstanding selling expenses value being 200. And then rent received in advance. Rent in advance. If you receive any income in advance, rent received in advance is your liability, because you have to now you are owing for him, so you have to consider this being liability, 200 rupees. Okay. Stand corrected if I am making any calculation or posting errors. Outstanding interest on loan. Come on, get this. Outstanding interest on loan, the value being 100. So I have posted all these things. The first block, this block will be summed up and get me the final value here. Come on, 6335 minus 1000 plus 1605. So the final value here is 6940. This is 6940. Come on, tally the asset side and liability side and get me the total value, and it should get tallied if you are perfect. Come on, otherwise you could have made some compensating error, some sort of errors. Come on, tell me the total. Make it faster. 6940 plus 4000 plus 1000 plus 400 plus 500. Is it 12,440? I need your answers. Come on, come on. 12,440. If I made any error, kindly correct me. Yes. 3,800 plus 2,000 plus 2,000. 7,800 plus 1,000 plus 3,000 plus 400 plus 240. Yeah, we get the value 12,440. Yes, that's all. So once you are master, you can finish up this illustration straight away. You can skip the passing the journal entries, either adjustment entry or transfer entry. You no need to pass the adjustment entry or transfer entry at the advanced level. You can directly post all these things to the final accounts. By preparing the final accounts, you no need to post everything, right? I'll show the complete page. You can copy this. Kindly wait here. I'll post this. Okay, I think so you are able to see the full picture. Pass the journal entry or copy this now. I think so you don't have any queries. If you have any query, you can raise this.